Good evening, everyone. Time for another silver update. This is a 10-minute chart of gold, and you can see by the price action here that we've pretty much recovered all of the loss from about 1626, 1630 down to 1555. So a good 75, 80 bucks. We've recovered that, and you can see we're just slowly trying to gain back that, and that's normally the way manipulated markets work when they're rallying, is that they rally. If we pull in the volume, maybe that will give us some more information. Normally when they're rallying, they rally slowly and they sell off very rapidly, and that's because they're manipulated. So you can see this huge spike, and that's the COMEX manipulators selling things off, and that takes a lot of work to get things back up. So we're coming back up to a key point here to see whether we can break out through this point or this point here and go into new highs. So this is going to be key levels here between 1625 and 1640 to see if we can make up the difference. Hopefully tonight we'll get some move above this price point right here, and if we do, we may run very quickly to the 1640 level. We'll just have to wait and see. Silver is not as it's not as strong of a formation, although it is fairly strong. You can see the same type of thing is happening, rallying on very little volume. Now you can see a massive spike in volume here. This may be actually the rolling out to a new contract, so that's difficult to tell. As you know, the futures contracts, they expire, so if you're going to give a continuous price chart, you're going to have to roll new months into it, and that causes problems. So that may be what this spike is. And let's go to the question of the night, and there's actually a number of questions, so we'll try to deal with them fairly quickly. This is from AVD Human, and he asks about bonds and petrodollar. I have two questions. By the way, I really like how you break down the silver charts. What will happen to the US dollar with China and Japan trading with each other in their currencies, and China and India buying oil with gold from Iran? And why are people buying treasuries? Also, would like to know how you're awakened, if you recommend any books and videos to further my education. Thanks for all your work. So, really three questions. Let's look at the first here. What will happen to the US dollar with China and Japan trading with each other in their currencies, and China and India buying oil with gold? So, what he's referring to here is the fact that they're signing these bilateral trade agreements that they're kind of the equivalent of barter. Although they may use their currencies, they're pretty much just bartering with each other. Of course, what that's going to do is it's going to reduce the dollar volume of trade, and that is going to reduce the demand for the petrodollar. That's going to be a natural result of that. So if China well, obviously Japan isn't going to be able to sell a lot of oil to China because they don't have any. China's probably not going to sell any oil to Japan. So what are China and Japan going to be trading? Well, maybe different manufactured goods, maybe some natural resources from China, possibly food. Don't really know, but the more and more they do outside of the dollar, the more indirect effect it has on the petrodollar. Now, China and India buying gold, buying oil with gold from Iran. Well, what's Iran going to do with the gold? How's that going to affect the gold market? That's a big question. If that becomes a big trade, then that's definitely going to have some impact on not only the oil market, but the oil and the gold market. And I don't think that's happened yet. So if it does, it's going to be really big, and of course it's going to be another blow to the petrodollar, which is going to decrease the volume of dollars needed to keep that going. So that will be more pressure on the dollar. Next question, why are people buying treasuries? Well, it's my contention that people aren't buying treasuries. The treasuries are being purchased by the Federal Reserve, and it's not people that are buying them, and it's not foreign governments that are buying them. It's the Federal Reserve Bank, which is printing up money out of thin air, buying the treasuries, and funding this $1.5 trillion continuous deficit that goes on year after year after year. Because I think the foreigners have seen the writing on the wall that recycling of the dollars isn't going to work anymore. They're just going to get more dollars back, and it's going to be a losing proposition ultimately. And of course, domestically, as far as investors and pension funds and stuff, these are the groups that that have 8% and 6% and 7% yield goals. Why would they buy treasuries when they're yielding? I think the 30-year, you'd be lucky if you get 3% on that. So the yields just aren't there. There's really no reason for people to buy treasuries, and I really don't think they are. And the last question, also would like to know how you were awakened and if you recommend any books and videos to further my education. Thanks for all your work. That's a very good question, and I thought a lot about it, so I went ahead and did pick from Amazon, and I picked 3 books, and we'll start with what's, in my opinion, the most important book, and that's going to be Reminiscences of a Stock Operator. You don't actually have to buy that because I think it's old enough that it's free. You can find it in PDF form on the internet if you need to. I always cite those in my videos when I'm reading from Jesse Livermore. But if you want to, you can go to Amazon and buy a copy of it. You can see there's 58 used from $8 a piece. So that's going to be the classic, of course. That's Jesse Livermore, who's a self-taught stock trader as well as commodity trader. And he pretty much single-handedly invented all technical analysis and all fundamental analysis at the same time. So he's the greatest trader that's ever lived by far. Now, the next book would be Market Wizards. This is the original Market Wizards by Jack Schwager. This came out in the 80s, and it's an interview format. A number of traders are interviewed there, including Jimmy Rogers. I'm drawing a blank here, but Ed Seykota, Paul Tudor Jones, a lot of great traders. Now, there's versions 2 and 3, but in my opinion, the first Market Wizards is the best, especially the interview with Jimmy Rogers and how he explains his system of trading. Of course, it gives the history of the quantum fund and starting it with George Soros. And there's just a lot in that book. I probably read that book at least 15 times. I've read Reminiscences of a Stock Operator probably 30 times. And the interview with Jimmy Rogers made me buy the rest of his books. And in my opinion, as far as Rogers goes, the best book that he's written would be Investment Biker, Around the World with Jim Rogers. And this is a fascinating book because this is where Jimmy Rogers actually gets on a motorcycle and pretty much drives through every single country in the world. And he's looking for border crossing. That's where he tells you that the border is no place to dawdle. Once you cross a border, you need to keep moving. And of course, you get all the stories of the bribes. You also get, most importantly, the stories about black markets and currencies. And that's very, very important because as we're moving into a world again with exchange controls. Now, when he was in Africa, parts of South America primarily. These were the countries that had exchange controls, and he explains how you determine the value of the currency based on trading in the black market versus trading at the official exchange rate, and how much there is at the border in trading, how tight the border is, and all of these things help you determine whether or not you want to invest in that country. So it's an excellent book. It's a perspective that you really need. He actually went to Japan and then crossed over into Russia, and he actually traveled from the eastern part of Russia all the way through over to Europe, and you get interesting information about the roads, the rails, the villages and hamlets that are hidden in Russia, hidden all over the world, in fact, where people are still just living normal lives. So a fascinating read, just unbelievable. Definitely should get that. And you can see that you can actually get used for $1.46 or new for $4. So I highly recommend that book, and of course Market Wizards and Reminiscences of a Stock Operator. So great question. Those have been the three books that have been the most influential in my thinking and understanding of markets and how they work. And let's go to the story of the night. I don't have a lot of time to spend on it, but this is one I just saw on Zero Hedge, and I think this is a fascinating story because it gets into the inner workings of the banksters. Of course, we already know how they're all interconnected. They have a revolving door between the Treasury, the New York Federal Reserve Bank, the President's administration, and then back to Goldman Sachs. So this is nothing new to anybody that's been following it, but it is a very interesting observation that the Freedom of Information request on the Greek Goldman swap situation is not being complied with. What is Mario Draghi hiding? And I'll read a little bit of this. Back in February 2010, in the aftermath of discovery that none other than Goldman Sachs had facilitated for nearly a decade the masking of the true magnitude of the non-Maastricht conforming Greek debt, Zero Hedge first identified the prospectus for a Goldman underwritten swap agreement securitization titled Titlos PLC. We titled the analysis, "Is Titlos PLC the downgrade catalyst trigger which will destroy Greece?" Because for all intents and purposes it was. At that time, a rating agency downgrade of the country would lead to a chain of events which would make billions in assets ineligible for ECB collateral, forcing a massive margin call on the National Bank of Greece, which likely would have precipitated a Greek default then and there. In retrospect, considering the 2 years of pain that Greece has already suffered, this may have been a better option, as the country would have taken its bitter medicine and become a second Iceland case study by now, growing at a brisk pace, unencumbered by debt, free from the clutches of the euro, instead of having its economy collapse by nearly 10% every year without any resolution in sight. But that is irrelevant for the time being. What is relevant is Titlos itself and what Bloomberg did after we posted the analysis. It turns out that following in the footsteps of Mark Pittman, Bloomberg sued the ECB under the Freedom of Information rules, requesting, quote, access to two internal papers drafted for the central bank's 6-member executive board. They show how Greece used swaps to hide its borrowings, according to a March 3rd, 2010 note attached to the papers and obtained by Bloomberg News. The first document is entitled The Impact on Government Deficit and Debt from Off-Market Swaps, the Greek Case. The second reviews Titlos PLC, a securitization that allowed National Bank of Greece, SA, the country's biggest lender, to exchange swaps on Greek government debt for funding from the ECB. The executive board said in a cover note, the ECB's response, quote, the European Central Bank said it can't release files showing how Greece may have used derivatives to hide its borrowings because disclosure could still inflame the crisis, threatening the future of the single currency. Maybe. But what is far more likely is that the reason why the ECB, headed by none other than Goldmanite Mario Draghi is desperate to keep these documents secret for another reason, a very simple reason. Mario Draghi, 2002-2005, Vice Chairman and Managing Director at Goldman Sachs International. In other words, Draghi was a key executive at Goldman at precisely the time when none other than Goldman Sachs was hired to create and facilitate the active hiding of the true extent of the Greek problem. In yet other words, could it be that none other than the head of the European Central Bank is refusing to cooperate with the Bloomberg Freedom of Information Act, something even the U.S. Federal Reserve ultimately succumbed to, which led the revelation that the Fed had handed out trillions in secret loans to banks all around the world, and that includes tens of billions under-the-table loans to J.P. Morgan, contrary to Diamond's defense that he did not need the TARP money in the Senate yesterday. He did, and much more, but since when is perjury a crime before a kangaroo court of bought politicians? And here's the chart of J.P. Morgan. So that is a fascinating disclosure. The fact that Mario Draghi was actually the man in charge at Goldman Sachs during the time that this operation occurred, which was the hiding of the Greek debt, allowing them to get into the EU and get involved with this gigantic mess now that's collapsing before our eyes. So that just goes to show you that as it is a revolving door in the United States between the Treasury, the Fed, the government, and the corporations, the corrupt banks, Goldman Sachs, J.P. Morgan. The same thing is the case in Europe. And of course, when is this all going to blow up? I think one of the reasons they're trying to put this off as long as they possibly can is because when it does blow up, I don't see how they're going to be able to keep people like this Mario Draghi out of jail. So back to the chart. The gold and silver charts show that we're rallying, trying to get back up to make a challenge to the 30 mark in silver, and in gold we're trying to get back up to that 1640 level and hopefully make a rally. You can see if we pull out on the 8-hour chart that we're doing a lot of backing and filling in this spiked area. The area was resistance for a long time, and then it rallied strongly and became kind of support with spikes here and here. Now this is different in that we're backing and filling and churning, so this should be stronger support due to the fact that there's been much more trading at these prices as we build up. If we build up and go higher, there's probably a more likelihood that we won't come back down and test it than we did with these two. And we'll talk to you next time.